Navigating a bear market with sectors. How long has it been since we saw a real bear market? 2008, 2000, 1987, or maybe we should go back to 1973, 74? Or is it all of the above? And what exactly qualifies as a bear market? What is needed to say that a bear market has ended? For the S&P, 1987 probably qualifies as a bear market. But it took the market less than 2 years to recover and get back above pre-crash levels. From the high in 2000 to the low in 2002, the S&P almost halved, and then doubled to the high in 2007, then halved again and doubled again. But it took until 2013 before the S&P managed to move beyond the 2000 peak levels. Was that a 13-year bear market? Or were that 2 bear markets followed by 2 bull markets? The Japanese Nikkei index peaked in December 1989 and still has not been able to take out that high. As a matter of fact, the Nikkei is trading around half the value it had in 1989, 30 years down the road. Is Japan still in a bear market or getting into a new one? The fact is that bear markets happen, and we, technical analysts, investors, traders, we have to deal with them. Problem is that it is a cage fight. The gloves are off and there are no rules. StockCharts.com offers a well-stocked arsenal holding a wide array of weapons. My weapon of choice, not surprisingly, is the relative rotation graph, RRG, to track the rotation of sectors around the benchmark based on relative strength. Closely tracking the rotation of sectors around their benchmark can help you a great deal with getting an idea or guidance with regard to the behavior of the market as a whole. Different sectors behave differently under different circumstances. Some sectors are usually doing very well during advances, while other sectors are doing well when the market comes down. There are a few ways to track offense versus defense in terms of sectors. One very well-known method is the widely followed sector rotation model, as it was developed by Sam Stovall many years ago. You can find that at the bottom of the page of the perf chart for US sectors. A method that I started working with a few months ago is keeping an eye on the rolling beta for each sector. Usually, sectors with a beta above 1 are more offensive, while sectors with a beta below 1 are more defensive. I've set up a spreadsheet that tracks the rolling beta for the 11 S&P sectors, which I'm happy to share with you. Just drop me an email and I'll get it to you. The tails on the various sectors on an RRG provide information on the direction and the most likely path of that tail in the weeks to come. Knowing which sectors are defensive and which sectors are offensive and in which direction they are traveling or rotating will then help you to make an assumption on the direction of the market in general. Very often, that rotation to more defensive sectors starts well prior to the turn in the market itself. It will be no surprise that the current rotation is all about defense. Sectors like utilities, staples, healthcare are well inside the leading quadrant and traveling at a positive RRG heading. All in all, this still suggests a cautious approach to the market. The good news is that sector rotation will continue to take place, and closely following these rotations will help us finding new trading and investing opportunities in both bull and bear markets. In the RRG blog and my weekly show Sector Spotlight here on StockCharts.com, I will track and provide commentary on this ongoing sector rotation, as well as provide continuous education on how to use and read relative rotation graphs. Please stay safe during these crazy times, and don't forget to check into the site to monitor your charts, read the market commentary and watch StockCharts TV. One anecdote I want to share with you, and it comes from my good friend Trevor Neal. One day we were sitting in London, we had a coffee around 11 a.m. in the morning, and then the pub started to fill up with people who were going to have lunch. Lots of these people were drinking pints of beer and glasses of wine. I wasn't very used to that because, we don't drink during lunch. And then Trevor spoke the historical epic words drinking over lunch is such a lost art. And I had to think of that making this video, because I think navigating a bear market is such a lost art. Thank you, and see you soon.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.